Good evening and welcome to another Life Class Next Level session. We do honor God today for blessing us to come together with you again via Zoom and Facebook and YouTube for another exciting and informative session in Life Class. Tonight, our topic is good money habits. And we have a very exciting presenter that is going to come before us. And we're going to get started in just one moment. First, I want to have a word of prayer as we begin our session, and then we're going to introduce our speaker on tonight. Dear God, we just honor you tonight for who you are. God, we thank you for your love, your kindness, your goodness, your mercy. God, you're just so good and so wonderful, God, and we just give you glory, honor, and praise. Thank you for all that you do for us, how you provide for us and make a way. But most of all, Father, we just thank you tonight for the gift of salvation. We give you praise, Lord, for allowing us to come together again in this Life Class session. God, I pray for the presenter tonight that you would bless her as she comes and presents information to us on good money habits. And we ask that you would touch the hearts and the minds of your people to be receptive to the information and the wisdom that will come to us, God, as we learn how to be good stewards of our money so that you can get the glory for your glory and for our good. And for these things, we give you thanks in advance for all that you're going to do. In the blessed name of Jesus Christ, amen and amen. Well, our presenter tonight comes to us. Her name is Mish Harrison. And Miss Harrison started her career with GM Financial in 2016 as a part-time customer experience advocate, taking inbound calls for customers seeking assistance with their car payments. She was promoted to a team leader in November of 2017 and eventually joined the Strategic Initiative team as a specialist in 2020. During her role as a specialist, Mish began delivering keys presentations to local high schools, colleges, universities, and organizations to help spread financial literacy awareness across the Dallas-Fort Worth area. In February of 2022, she was promoted to Strategic Programs Manager role and continues to facilitate keys, live presentations along with her team specialists. Mish also manages a career development program for internal employees at GM Financial who desire to obtain skills to help master their current role to promote to the next level. She also helps facilitate career development workshops for team members and leaders within the organization to provide internal and external resources such as interviews and resumes preparation, and help facilitate opportunities for cross-functional collaboration. Mitch is also a business owner and invests and manages rental properties back in her hometown in Wichita Falls, Texas. Mish also holds a Bachelor of Arts in Communication Technology from the University of Texas at Arlington. Mish's core principle is to be the person you needed when you were younger. And we are just so excited as we are anticipating the information that is going to come to us from Mish on tonight. Now, as we are listening, we want to encourage you to take note. And if there are questions, we want you to put them in the chat or hold them at the end of the presentation. We'll be able to go back and to answer any questions that you have in the chat, or you can just unmute and ask questions of our presenter. So at this time, I'm going to give space to our presenter, Ms. Mish Harrison.
All right, thank you so much for that warm introduction. I really appreciate that. Thank you all so much for having me tonight. I'm so happy to be sharing some time with you all today to talk about good money habits. I hope you all had a great start to your week. And if you have not, I hope today's presentation is going to give that to you. So with Good Money Habits, I have to say that this module is personally one of my favorites. It's going to take about 40 to 45 minutes of our time, and we will have some time for any questions towards the end of today's presentation. Just don't hesitate to jump in and participate. If you have a question on a particular item that I'm talking about, please feel free to jump in the chat. And then also feel welcome to share any of your own experiences as we go through these scenarios. At the end of today's session, I am going to have some keys resources, so program resources for you all, so I can give to you. And then I would ask kindly, have a short survey at the very end of today's presentation, and it'll be a QR code on the screen. So if you would take that survey for me, I really appreciate that. So I'm going to go ahead and get started. I'm going to move forward to my next slide here and talk a little bit about our company here at GM Financial. So I want to take an opportunity to talk about who we are. So GM Financial, we are the captive auto finance arm of General Motors. We offer retail financing and lease programs to meet the needs of our customers, as well as commercial lending products to help our dealerships and small businesses finance and grow their business. We do have operations in all of GM's major markets, and our earning assets are over $117 billion. We do hold over 7 million retail contracts right now. And we also do offer auto finance products to over 14,000 dealers worldwide. So now that we've talked a little bit about what we do, I want to talk about who we are. So GM Financial, we do embrace an inclusive culture that honors and respects our team members, our customers, our dealers, and especially our communities. We do have over 9,000 employees company-wide. And as you can see, our professionals within our company, we have over 50% of professionals of color. And then even within that bucket, we do have 29% of those in leadership roles, 55% of women, and then also we have 50% of millennials within our company. Our company is really huge on donating. So in 2022, we donated more than $2 million to over 160 nonprofit organizations. And one of the things that I love about our company is they really encourage their employees to go out and volunteer. They offer all of the full-time employees 8 hours of paid time off each quarter to go and volunteer to a nonprofit organization of their choice. All right, so I want to jump into the objectives for today. So after today's session, I want to be able to share with you a better understanding of how to build up credit to be able to use your money to your advantage. And also, I want to talk about how to grow your wealth over time. And that specifically, we're going to talk about budgeting properly. So I'm going to jump into credit. So let's go ahead and begin. So the first thing I want to talk about, what exactly is credit, right? So when we think about credit, it is an important aspect of good money habits. And so let's look at that formal definition. So with credit, basically, it's just an agreement. It's an agreement to pay for goods or services over time, but that typically does come with interest. And without credit, you would need to save enough money to pay for the entire cost of the purchase up front, right? So cash is still an option though, right? I know for myself, I always like to keep a little bit of cash in my wallet at times. You never know if you're trying to get something or you're in a jam and they don't take credit cards. So I'm still a little bit of a cash person. So wanted to ask you all, if you are still a cash person, please comment in the chat. Let me know. You like, yes, Mish, I'm still a cash person as well. All right, so we talked about what is credit. Let's look at some reasons why credit is important. So A good credit score is going to be an indicator to lenders that you can be entrusted with bills and be responsible for making timely payments. Your credit score is an important factor in those lending decisions. So, this score can either positively or negatively impact your ability to make purchases using credit. All right. So, want to talk about when does having good credit matter? So, if anybody can comment in the chat for me, let me know. Are you currently looking to purchase something? Maybe you're looking to purchase a house. Maybe you're in the market looking for a vehicle, and I hope it's a GM vehicle. So, let me know in the chat if you are currently in the process of using your credit in some way. And I will reveal some reasons why having good credit matters. So whether you're moving out, or I like to tell students, that are preparing to go to college, hey, you want to live off campus, your credit's going to matter. Like I mentioned, maybe you're getting a car, or maybe we have some people on the call that are looking to pop the question and they want to buy a ring. So credit is going to matter. Maybe you are looking to tap into home ownership. So you want to make a down payment on a house. But typically, if you want to finance literally anything, credit is going to matter in those scenarios. So I want to talk about the top 3 credit reporting agencies. And I know that we had some questions that were shared ahead of time when you were registering for today's session. One of those questions that came up was, what should someone do if they find errors on their credit report? So we're going to talk about that on this slide. But I want to share with you the top 3 credit reporting agencies. So the first one is going to be Equifax. We also have Experian, and we have TransUnion. So each of these agencies collect information about your borrowing and payment habits. And they do, your credit history is compiled, right? And each credit agency creates a score, your credit score, which helps lenders determine your credit risk. So sometimes the scores can, differ between these agencies. I know for me, every time I check my credit, I'm like, why is my Equifax this score, and then my Experian is something different? So lenders may only send data to 1 or 2 agencies, and each agency uses its own method for determining a consumer's score. Okay. So I do want to ask you all for a moment here. When was the last time that you checked your credit report? Let me know if you can comment in the chat, whether it was within the last month, maybe it was within the last 3 months, or if it's been 6 or more months. If you can comment in the chat with me, let me know, when was the last time that you've had an opportunity to check your credit. But to get the full picture here of your credit profile, so you can request 1 free report from each agency every 12 months. Some may even provide up to 6 free reports each year, and you can request additional reports for a fee. But although your credit report will not tell you your credit score, it is important that you regularly review your history for any suspicious and unexpected activity. So just like someone asked, what should you do when you find those errors on your credit report? There is an option where you can dispute those errors. So whether it's an account, or even if it's personal information, you can dispute that information through those credit bureau agencies. All right, somebody said they just checked theirs Friday. Okay, good. Over 6 months, 4 months, and earlier this month. That's great. Thank you all for sharing. I do want to mention that there are some other apps like Credit Karma. Those offered through your bank. So you can, like if you have an account with your bank, at times they can tie your report information to that account. And sometimes they offer those products for free. So these resources will definitely help you monitor your credit. And they may pull credit reports from other agencies. So just be mindful that it's just to provide a snapshot of your credit worthiness. So again, if you're doing business with a bank or financial institution, or you have a credit card, at times they may offer to pull your report for you and send it to you on a weekly basis, or even on a monthly basis. All right. So we've talked about these reporting agencies. I want to talk about the difference between prime and subprime. So when we hear prime or subprime, if you can comment in the chat for me and just let me know, what are you thinking when we're thinking about prime scores versus subprime scores? What comes to mind? And while you're doing that, I do want to mention that these scores offer a general guideline to prime and subprime scores. However, lenders and other companies that evaluate your credit, they set their own guidelines, okay? So let's go ahead and dig in. So with the first category here, we have prime credit. So these are customers with credit scores. Very good. Top and bottom scores. Yes, I like that. Thank you for sharing. So with a prime credit, customers with a credit score of 680 or above are generally considered prime customers. So these are including those scores as high as 850. They typically get those lowest interest rates, maybe even an offer to buy or lease a vehicle with no down payment. So I always like to reference those commercials we see on TV where they're like, no money down, with those type of commercials, you read that fine print. They're like, okay, if you have prime credit, you could fall into this bucket. Because I'll be going to the dealership and I'm like, wait a minute, you said no money down. So yeah, with the prime credit, that's what that is. That's an example there. So another category here, which is right in the middle, we have our near prime customers. So these customers have a credit score that is generally between 620 and 679, and they usually get relatively low interest rates, and they may have to meet additional requirements. So these requirements or stipulations might include a higher down payment, or they may need to show proof of income or some pay stubs, and those are just some examples there. Now, if a customer's credit score is below 620, they are considered subprime. So they may qualify for higher interest rates because these customers are considered to be a bit riskier. They will most likely need to meet certain conditions and provide documentation. They may ask for proof of residence, proof of income, some references, and some may not qualify for financing. They may need a co-buyer or someone to share the financial accountability. So when we unpack all of these numbers, you may be asking, okay, do these numbers really matter? So interest is the direct cost of using credit. And each time you use credit or borrow money, you may pay interest to that creditor. So prime customers typically qualify for the lowest interest rates. And in general, a lower interest rate means that you will end up paying less over the life of your financial contract. So let's look at these numbers in action here. So I have a scenario for you all. We have two customers that want to buy this nice Malibu here. And let me tell you, my first car was a burgundy Saturn, and I love that car, but man, my elbows, oh my God, my wrists would be hurting because I had to roll my windows down manually. But I loved that car. But yeah, I wish I had a nice little Malibu like this one in the picture here. So all right, and I'm curious if you want to tell me what was your first car. Tell me in the chat here because I want to know. Let me know what your very first car was. All right, so let's take a look at this scenario here. We're going to have a prime customer, and we're going to compare that prime customer to a separate. Oh, you had a Saturn too. All right, a Mustang. Okay. Yes, I wish I had a Mustang. I wanted a Mustang, but my dad was like, no, ma'am. Mm-mm. Camaro. Okay. All right. Y'all were rolling. Okay. All right. So let's take a look at customer A versus customer B. So with our customer A, that's our prime customer. Okay. So this customer is applying for this Malibu. And their annual percentage rate is 3.5%. So that's a pretty good deal right there. That's a lower interest rate. That monthly payment equates to $462 a month. And when we compare our prime customer to our subprime customer, what do y'all think we're going to see here? We're probably going to see some double digits in the interest rate, right? Yeah, so let's take a look here. We have subprime APR is 15.5%. So that payment is equating to $642 a month. So they qualify for a higher interest rate. So this is the same car, same price for both customers, but due to the higher interest rate, that payment would be around $642 a month for that same vehicle. So when we look at that difference there, that's $180 a month. That's insurance right there, right? So over the life of a 72-month retail installment sales contract, customer A is going to be paying almost $13,000 less than customer B. And man, cars are so expensive nowadays. I'm pretty sure my Saturn cost half of that 13,000 back in the day. So, but yeah, that's a lot of money. That's a lot of money that's going towards interest. So that just tells us how important credit matters when it comes to you falling in that prime category versus that subprime. Yeah, that's a lot of extra. Yes, absolutely. All right. All right. So, and now I want to talk about what makes up a credit score. So I will have to say this is my favorite presentation, but this is my favorite slide. I love this slide, especially when we go to high schools and college and universities. I always tell the students, like, take a picture of this slide. This is so important. It's going to come in handy. So, and actually, we had a lot of questions that came through when you were registering for the event. And majority of those questions will be answered on this slide. So again, that's why it's my favorite slide. So the good thing is credit scores are not based on how much money that we earn, but they are used. This is how they use them in your credit. So we're going to talk about what makes up this credit score. But I do want to say that the percentages represented are approximate, and they can differ between reporting agencies. And then lenders and other companies that evaluate the credit, they set their own guidelines. Okay, so this is just in general. So here are some factors that go into making up your credit score. And for the first two on the left-hand side here, these are the biggest ones. They're the most important. And I always try to tell people, if you can pay attention to your payment history, making sure you're paying your bills on time, every time, and if you're not maximizing the amounts that are given to you on credit cards, you'll be just fine. So that's 65% right there. So 35% pay your bills on time every time. 30%, you can definitely do what experts recommend, which is using only 30% or less of your available credit there. So those two are the biggest chunks of what makes up your credit score. And then the other side of the wheel are the smaller areas, and these typically come with time. So you could tap into these. And so the 15% is the length of credit history. So the longer that you're showing responsible use of credit, the higher your score can be. Okay. 10% new credit. So you want to be careful of opening new accounts as needed. Always like to say, every account has its purpose. So when you're thinking about opening credit cards, what is the purpose of this account? Is it for emergencies? Maybe you're opening an account at a store that you frequent very often, and it makes sense, like, hey, I shop here all the time. They have good perks. So it just makes sense. I might as well open this card because I'm going to use it and it's going to be beneficial for me. So those are some things that you want to be cognizant of when you're doing that new credit. And then the other category here, 10% credit mix, which also takes time, so a good mixture, having some credit cards, maybe some retail accounts, installment loans. I know a lot of people start out, especially when you're if you're furthering your education, a lot of people, like, one of the first things that hits their credit is student loans, right? So, just having a good mix, credit cards, loans, home loans, things like that. Again, that category comes with time. So it's a small category. So it's not that huge. Okay. So, there were some questions. What exactly is a credit score? How does it affect financial decisions? So this should be able to answer that for you. This is how it affects those decisions. They're looking at your credit. Your credit score is coming from how you participate in these areas. How can someone build and maintain a good credit score? We're going to talk a little bit more about that. But again, making sure you're making your payments on time, also not using more than 30% of your available credit. And what are some potential consequences of missing credit card payments or carrying a high balance? To answer that question, I would say it's really important not to miss payments or carry a high balance, because that is 65% of your credit, your credit report, your credit score. So I always like to tell anybody that if you know you can't make the payment, or the balance is getting high, definitely call your creditors. Call them and talk to them, see what options they have. Sometimes they can make some adjustments. Maybe they can change the due date or something like that for you. But you definitely don't want to miss the payments, and you want to try to avoid carrying a high balance. All right, so we've talked a lot about what makes up a credit score. So let's talk about how to get started. So I want to talk about some options that you may have if you don't have credit history. So this is going to compare a few different credit card options. And there was a question that was asked, and that question was, what are the benefits and drawbacks of having a credit card? So we're going to talk about some of that on this slide. Okay. So the first category is the bank credit cards. So bank credit cards, this is an option that you could start out with if you have no credit history, or your history is very small. It's very, very short. So with bank credit cards, if you've been responsible with maybe a checking or a savings account, you can try applying for your first credit card at the bank or credit union that you already do business with. An existing banking relationship can improve your chances of getting your credit card application approved, especially if you've handled your account responsibly. You can always apply online or go and visit a bank branch. So that's always an option. Even if you are in the process of maybe starting a business, that's always a good indicator to go into the branch and talk to them. Let them see a face with the business. Talk about your business to someone. So get that FaceTime with them, so they can kind of help you identify what are some things that you can be doing, whether you need to open up a checking account, savings account, or even start opening up some business credit there. So always a good idea to go in the branch if you can. All right. So if bank credit cards is not the best option for you, there are some other options. So there is the store cards is an option. So with store cards, those are those retail and department stores. So I want you to comment in chat. Let me know, where do y'all like to shop at? Where do y'all like to shop? I like Target and I like Sam's Club, but man, Sam's, it's so funny. Every time I go into Sam's, I like to people watch. I don't know if y'all like to people watch, but people, they are buying like it's an apocalypse. Oh my goodness. People have so much stuff. And I'm just thinking, where's all that stuff going? So yes, let me know where you like to shop at. Sephora. Okay, I like Sephora. Yeah, Target, man, let me tell you, I go in for one thing, and I'm in checkout, and I'm spent like $200, and I'm like, why? How did this happen? I'm going in for one thing. They get me every time, so I try to stay out of Target. Yes. All right. Thank y'all for sharing. TJ Maxx, yes, I love TJ Maxx. They get me too. All right. So the retail and department stores, these cards, they typically have more favorable approval odds. So on the downside, they have higher interest rates that make it expensive. Excuse me. It makes it expensive to carry a balance from 1 month to the next. So another downside of these cards is they are not versatile. So I can't, use my Target card to, shop somewhere else. I have to use it at Target. So that's one of the downsides for these types of cards. However, retailers do often encourage spending by offering discounts for using the card, and having a retail store credit card as your first credit card can definitely help build up a good enough credit history to apply for maybe a major credit card within a few months. And a good tip that I like to share as well is, if you've been minding your cards, you've been doing really good with, keeping, if it's a low balance or no balance, you've been making your monthly payments, you can always contact your creditors and you can ask them like, hey, I've been doing a really good job. Can you give me an increase? Can you increase my limit on my card? Or if you can't, when would be the best time for me to call back and see if you can increase my limit? All right, so we talked about bank credit cards, we talked about store cards. So let's talk about the secured credit cards. Okay, so when you lack credit history and that's keeping you from getting a standard credit card, you can apply for a secured credit card. And what you would do is you make a deposit against the credit limit of the account, and then the bank is going to hold that deposit just in case you don't make your payments as agreed. And then you may have the chance to convert it to an unsecured credit card later on, but you want to be sure that the card issuer is reporting your payments to the credit agencies so you can build your credit and eventually get an unsecured credit card. So that's really important. Like I mentioned earlier when we talked about those 3 agencies and how sometimes your score may differ from those 3 agencies. So you just want to make sure you're getting credit for all your hard work. Make sure that they are reporting to those agencies, even if it's not all 3, but if they're reporting to 1 or 2, so you can show that credit history there. And then the last option, go ahead.
Can you talk about where they can get a secured credit card from? What institution or where can they obtain a secured credit card from?
Yeah, that's a great question. So what I always recommend that you can do is you can go online and you can basically like type in different cards based on your credit score. So you want to check your credit first and see where your credit score lies. And then you can go online to these sites. There's many sites out there. And what you do is you put your credit score in the site and they'll recommend cards for you based on your credit score. So you don't want to just go and apply for cards. You want to find those sites where you're putting in your credit score and it will tell you, okay, well, based on your credit score, these may be some good cards that you can apply for. And those recommendations, out of those recommendations, there may be some recommendations for the secured credit card, if that's helpful. Okay. All right, that's a great question. So the last option here is authorized user. So authorized user, becoming an authorized user on your account that gets reported to the 3 major credit agencies can definitely help you establish or improve your credit. It works in your favor if the primary account holder has a history of on-time payments and responsible spending habits. So a lot of students, parents, if you will, parents or guardians, they will, have their children on their cards as authorized users. So I know there was a question about how to help start building credit, and teaching children how to have good money habits. That is one of the ways that some parents do that, is by adding their children or, people that's close to them to their credit cards as authorized users. So you do want to keep in mind that while looking for cards, you want to watch out for those annual fees and high interest rates. That's what makes carrying a balance very expensive. So, So with that, I always like to encourage people that, just try to pay your balances off as best you can. Even if you can pay the balance off before your statement comes out, because typically that's when they're reporting your balances to your credit, is when your statement hits. So that's just a good tip, so you can help mind your balances there. All right, so I have some other tips on looking for credit. So certain credit card websites, kind of like what we just talked about, they're going to list the type of credit history needed to get approved. So you do want to make sure that you are only applying for those credit cards that are close to what your credit score is at the moment. And then you want to be very careful about too many credit inquiries that can ding your credit. You want to avoid applying for too many cards or cards requiring excellent credit when you're first starting out. And another tip that I have is always encourage everyone to get someone that you trust to open, whether it's a joint credit card with, or make you an authorized signer, or even talk to if you have questions about credit in general. Again, going into the bank and talking to someone is always such a great idea. Go start with people you're already doing business with. So those banks, financial institutions, those credit unions, that could be your first line of defense. Talk to them about your situation, what you're trying to do, what your goals are, your short-term and long-term goals, so they can help you identify the best products to reach those goals. So we've shared some tips here. Let's talk about some do's and don'ts, because we went over a lot of stuff today. So I want to talk about some do's and don'ts here. So some of the things that we went over with the do's, we always want to use credit cards as a tool to build credit responsibly. Again, going back to cards having a purpose. Sometimes people open cards and they don't use them. Sometimes they open a card and they max it out. So you just want to have that good balance, having a card to have a purpose. So one of my very first credit cards, I opened it up and the purpose was emergencies. So, I used it for emergency situations with that Saturn, when I had to get some tires or something like that. That's what I used it for. Also, we talked about how experts do recommend to use only up to 30% of your available credit every month. And if you feel like you want to go ahead and pay it off every month, you can do that. If you want to pay it before the statement is printed, that statement date, you can do that as well. You do want to make a plan to pay off credit card debt and set goals. Okay. And then you want to monitor your credit activity, preferably at least once a week if you can. So if you're already, getting your credit information from your bank and they're sending it to you weekly or monthly, but you definitely want to be very close to it. I always tell students when I'm talking to high school kids, it's like your adult report card. That's what I tell them. And like, oh, okay, yeah. So you want to mind it. You want to make sure that you're in tune with what's on your report at all times. And you want to be able to catch things if there's something that's not accurate. You've been looking at it so it doesn't get too far off for you. So talked a lot about do's. So with the don'ts, the biggest things is, don't miss those credit card payments. It's very important. Those things can hit you. It's a bigger category when you're looking at your credit score. You don't want to apply for every credit card offer. Don't spend more than you can afford. And I would not recommend sharing your credit card information with others. Even when we go back to the authorized signer, I know I had an aunt that made me an authorized signer when I was in high school, but I'm like, where's the card? She never gave me the card. She was like, no, I'm helping you, but I'm helping you. I'm not giving you this card. So that's what some people do, right? All right. So, so I'm going to go into some budgeting basics. I have a question in the chat here. So why is it important to not have very many inquiries on your credit report? Does it lower your rating or lessen your chance of approval from a creditor? Yes. So hard inquiries can impact your credit score. That is correct. Also, if you're applying for a lot of different things, businesses may look and see, okay, what's going on? Is there financial distress going on? Why is there so many credit inquiries for so many cards right now? So yes, having a bunch of credit inquiries can impact your credit score. And then the second part of that question, does it lower your rating or lessen your chance of approval from a creditor? It does, yes.
Yes, could you explain a little bit of the difference between a hard credit inquiry and one that is not considered a hard inquiry?
Yeah, absolutely. So for a hard inquiry, it's typically a request. Somebody is they're pulling your credit report and it's going to show up. So I like to refer to it as like a stamp, like they're leaving a stamp on your credit report. And then a soft inquiry means that they're pulling, but they're not necessarily leaving a stamp on your credit report. So there's many different reasons why people can do a soft inquiry. Even, for example, if you're looking to increase your credit limit, sometimes they will say, hey, we're going to do a soft pull. Okay, so that's them not necessarily stamping your credits. So that's the biggest difference between soft and hard. Hard, it can impact your credit score, and you will see that on your list of credit inquiries. And then a soft one, you won't see it, so it won't impact you. I see another question in the chat. It says, why does your credit score drop when you pay something off early? You know, it really depends. And what I would say is if you ever are about to do something like that, you know, or even going back to the inquiries, if you're about to apply for something or you want to pay something off, you can contact who you're doing business with. So say, for example, you want to pay off your car loan. You can call them just to see, you know, hey, you can have a conversation with them about what you're trying to do and see if that helps. Sometimes paying off things can temporarily impact your credit score, and then over time, you know, it can have some positive effects. But if you have specific scenarios like that, you can always reach out to a financial advisor to talk through those scenarios. There's also simulators online. So if you are doing business with a certain company, you can put your decisions that you want to do. Like, for example, if you go to Experian, Equifax, or TransUnion, you can put in there, hey, I want to pay off this account, or I want to close this account. If I do that, how will that impact my score? So if you check these boxes on their websites to say what you're about to do, sometimes they can simulate how big of an impact it would be on your credit score. Okay, so that is an alternative. You can utilize those websites as resources to help you make those types of decisions. All right, great questions. And keep them coming. If you have some other questions, please feel free to put them in the chat. I'm just going to keep going. All right, so we're going to talk about budgeting basics here. So I want to talk about the value of a budget. And before we jump right in, just let me know in the chat, does anybody budget? Anybody on the call, do you currently have a budget? And if you do currently have a budget, let us know how are you budgeting? You know, are you using a certain app? Maybe you like to budget, you know, good old pen and paper. You know, maybe you're doing Excel spreadsheet. Let me know in the chat if you currently do budget. I know I do several different types of budgeting. Yeah, I like Excel spreadsheet. Okay, thank you for sharing. Yes, sometimes I like to write things out. Like I'm a paper person. It's funny because when we were starting this call, my door rang. It was Amazon, and I had just bought these. I love pens. I'm a pen person, so I have like a bag full of pens, and I really like to write a lot of things out. So I'm a pen stealer. I'll have to say. I'm so sorry, but I will say that I'll replace the pen with another pen. So if you have a good pen, I'm sorry, I might take it. I may ask for it though. But yeah, I love to write out my expenses sometimes just to see them on paper and kind of see, okay, where is all my money going? Where am I spending all of my money? Like, where is it going? So I'm a paper and pen person, but I also do Excel spreadsheet as well. Okay. All right. Yeah. And there's lots of apps out there, you know, especially even if you have like a bank account. And, you know, sometimes if you log into your bank account online, sometimes they'll simulate like they'll put all your money in all those little categories. Are y'all familiar with that? You see that sometimes it's like, oh, you know, they're like retail and shopping. You spend a chunk of money on retail and shopping. And it's like, okay, well, thank you for throwing it in my face. Right. So yeah, they will do that depending on who you have accounts with. So, but there's lots of financial tools out there. There are lots of different apps. Some of them do have subscriptions and some of them are free. You can definitely go to your app store. You can go online and you can just Google some of the top financial apps for budgeting and see which one works best for you. So what I would say is you probably have heard of budgeting before, and you know friends and family members who use a budget, but a budget is basically a spending plan, and it lists your income, your expenses, and your savings. It definitely helps you understand how you spend your money so you can effectively plan for your financial future. So budgets are important financial tools. They do help us track how much money you make, how much you spend, and allow you to start saving too. So setting aside money each week or each month can contribute to your financial goals. Maybe one of your goals is buying a car, maybe buying a house, but every dollar saved gets you closer to that goal. So let me know in the chat, comment in the chat if you have a financial goal that you're looking forward to achieving. And if you wouldn't mind sharing, let me know what that goal is. What are your financial goals that you're looking to achieve? All right, so we've talked about what a budget is. And I will say, for me, looking at this list of why we budget, the biggest thing for me is the reducing stress part. Like, it really helps me understand, okay, I'm not going to avoid it. I see where my money is going. I see what adjustments I need to make so I can lower my stress level. So that's huge for me. I feel like that's one of the most important reasons why budgeting is so valuable. So with budgeting, I want to talk about compound interest. So when we started today's presentation, we talked about credit. And we know that credit is that agreement to obtain goods or services before payment based on the trust that the payment will be made in the future as agreed. But that's generally with interest, right? So what is interest? So interest is the fee charged for using credit or borrowing money. It can also be the extra money that you can earn when you're investing money or putting it in an interest-bearing savings account. But did you know that you can also earn interest on top of interest? So this is called compound interest, and it allows you to earn extra money on the money that you invest or put into the savings account and on the interest that's earning. So with compound interest, I have a quick little activity that I just want to show you all today. It's going to show us the power of compound interest. So I have a question, and if you can comment in the chat for me and just let me know which one you're leaning towards. So if we had a magic wizard that gave us the following choice, what would we choose? So if you were willing to take $1 million today, please comment in the chat, 1 million. Or if you wanted to take the penny that doubled every day for 30 days, if you can comment 1 penny in the chat. And it's just going to double for 30 days. So just 30 days, or you want the $1 million today. Let me know which one you're leaning towards, $1 million or the penny. Million or the penny. Okay. All right. Well, let's take a look. I have a calendar here, my 30-day calendar. So we're on day 1. So we have some $1 million folks in the chat here, and we have some people who prefer to take the penny. So let's take a look and see what this looks like after 7 days. So after 7 days, we're seeing that interest compound for that 1 penny. So if you chose the 1 penny, you've made 64 cents. What are we buying for 64 cents? I feel like, do they still sell the gum, like the individual gum, like the 1 piece of gum? I think we could buy 1 piece of gum. Yeah, 1 piece of gum. Okay. So let's take a look after 14 days. We're compounding. I see some more million dollars in the chat there. Yeah. Okay. It's a long game, not a short game. Okay. Let's take a look at 14 days. So 14 days, we're compounding that penny. And we are now at $81.92. So somebody said, I'll take the cool million. There we go. All right. So after 14 days, $81.92. What are we buying for about $82? That might be a pretty decent dinner for two, maybe happy hour time. It's been pretty expensive out there, right? What else are we buying for $82? $82. Maybe a decent pair of shoes too, I'd say. Yeah. Okay. All right. So I want to take a look and see what the compound interest looks like after 21 days. So let's see. Okay, we're getting somewhere. So we're at 10,000. That's almost what my Saturn cost my dad. Okay, 10,000. I think it was about 8,000. Yeah, 8,000. Well, it cost me because he made me pay. He was like, you're gonna pay me every month, and I'm like, okay, Dad. So yeah, I still had a car payment. So, but yeah, 10,000 for. I don't think you can find a Saturn with the windows rolling down for that price these days. There's probably a little bit more because cars are so expensive these days, right? All right. So we're making some good progress here. So we've got some people in the chat that said $1 million. So is there anybody who wants to change their mind? Are you still feeling good about the $1 million? Or do you feel like you want to come on over and take advantage of this penny compounding for 30 days? Anybody want to change their mind? No? Sticking to it? Okay. So let's take a look and see after 28 days. So after 28 days, okay, we have somebody that would change. Okay, so after 28 days, when you're compounding that penny, that has now compounded to over $1 million. Yes, over $1 million, 1.3 million. So obviously, day 29 and 30 are pretty big chunks. You see that compounding? So now that 1.3 has compounded to 2.6 because it's earning interest on top of interest, right? And then that 2.6 has now compounded to 5.3. So congratulations to my penny people in the chat. You are now a over $5 million winner. So we have the 1 million and then we have the over $5 million. So congratulations. But thank you all so much for participating. Thank you so much. I love playing that game. It definitely outlines some of those main principles when we're talking about budgeting, saving, compounding interest. We know that the sooner that you start, the more you'll have an end. But the best thing to do is just to start saving, start early, start now if it's possible, because essentially time is money, right? And you just want to be consistent in making your investments. You want to stay disciplined. You want to make saving a priority. And the more that you save, the more it can compound. And the last thing that you want to do is you just want to be patient because it takes time to grow. And I think someone in the chat, William, mentioned something about that. It's slow and steady. It takes time to grow, right? As you can see, the most exponential growth of this example comes at the very end. So just to conclude our session today, in summary, there's a few things we talked about. So we talked about managing your debt and building your credit responsibly. You want to make sure that your credit report is accurate. So requesting that free report from each reporting agency per year. And again, sometimes they may give it to you, more than once a year for free. You definitely want to keep track of your credit score. So use all of those free online services, or even your bank may offer some free tracking for you. And then you want to start your budget and work on sticking to it, right? So go online and go in the App Store, see what other budgeting tools are out there that you can utilize. And then you want to continue to use these skills that we introduced today. And even if you're already doing some of these skills, that is great. Just keep doing those. So that's what we have in summary. Now, I want to take an opportunity just to share some resources with you all. So you may be asking a little bit, wanting to know a little bit more information about our KEYS program. So this is how you can connect with us. We do have an email address, very easy to remember. It's just the word keys@gmfinancial.com. And we also are on social media at GM Financial. We do have an online website that gives you a lot of mini modules. So we have 3 to 10 minute modules that can help you reach your goals. So you may be saying like, oh, Mish, I just want to learn a little bit more about buying a home. Well, you can go to our website. If you go to this QR code, visit keysbygmfinancial.com. There's a long playlist of all these different modules that you can review if you have specific desires to learn about a specific financial topic. And then we also have a podcast. It's called Our 2 Cents Podcast. So this podcast, it definitely shares a lot of money triumphs and lessons learned from real life experiences. We do have hosts and guests that come and talk about these topics that are very relevant to our listeners. So you can download that podcast, and I believe it's on Spotify or Apple Podcast. And the last thing I want to leave you with is if you can do something for me, I would greatly appreciate it. If you can take our survey, so it's about a 5 to 6 question survey, let us know how you felt about today's presentation. Also, if there's anything in particular that you want to learn more about, please let us know. We have an opportunity to build these modules. So this is one of our 12 modules that we have. So this one specifically talks a lot about credit, but maybe you want to learn about investing, or maybe you want to learn more about debt management. We have different modules that cover those topics. But if there's something in particular, you can always leave that in your survey, because one of the things that me and my team, we get to do, we get to review our survey results on a monthly basis, and we get to see all the ideas that people are sharing. And then we get to go to our content team, and they get to help us build out more modules that talks about different financial literacy topics. So if you have a topic idea in mind, please don't hesitate to share it in your survey. And I want to thank you all so much for having me this evening. And I'll turn it back over to you all, and I can hang out for some questions as well.
Mish, I think you need to maybe advance the slide one more time.
Okay. Can you see the survey?
Was 2 slides together. I think we were seeing the, there we go. That's it.
Okay.
Thank you. There was one question. It says, can you tell us where to get compound interest these days?
Yeah, so I would start with a financial advisor. You definitely go to, if you are doing business with a bank, a credit institution, financial institution, there's lots of financial advisors out there that can help you decide what's best for you for compound interest. There's different options, lots of different accounts. So it just depends on what you want to invest in, and they can help you weigh those options. What I like to tell people when you're seeking financial advisors, one of the first things that they're going to ask you is, how much money have you saved? And they also want to know what your short-term and long-term goals are. So I would build that out, have that in mind, so they can help you decide what are the best financial products for you to take advantage of that compound interest, because it is a slow and steady game. So there's some things that you can invest in that may give you a quick return, but the risk is higher. And there's some things that you can invest in that you're not necessarily looking for a quick return, but you definitely want to have some type of return, and it's slow and steady. So the first line of defense is talk to a financial advisor. If you have financial accounts already, you can start there and ask them, hey, what other things I can invest in, or I'm looking to invest in, and this is how much money I have to start with. Can you help me navigate which accounts I should start investing in?
We have another question while everyone is doing this survey. Your thoughts on freezing your credit reports for protection, identity theft?
So, that's always a great option to tap into. I've personally never done it. I've never frozen my credit reports for protection or identity theft, but I know that there's a reason why they have it, definitely to protect yourself. I would, you can start with Experian, Equifax, and TransUnion. If you're in that situation where you're having to freeze your credit report for certain things, especially if it's identity theft, definitely reach out to them just to see how it impacts you, or even if it does impact you. I know that sometimes people do freeze accounts. For example, like if you lost your credit card, you can freeze, accounts, or even freezing your whole report. So I would definitely reach out to Experian, Equifax, and TransUnion to see how that's impacting you. And, especially ask how long, like, hey, if you want to do it for 30 days, or if you're looking to do it for long term, ask them how long and how that's going to impact you. That's a great question. Okay. I will say that we do have a short takeaway that I can share as well to be a PDF. It's like a one-page document. It summarizes today's presentation. So I'll send that over via email and feel free to share it with your family and friends. It also has some QR codes at the very bottom of the takeaway that will lead you to our website. So you can have it on hand just to get that information as well if you want to share what you learned about today. So
Mish,
send
is
it
there a
over.
way you can put that in the chat? Is there a way you can do that?
I don't know if it'll let me share the document in the chat on Zoom, but I could definitely try. I could
Yes,
try that.
you can just
Yeah.
drag it should take it.
Okay. Perfect. Let me stop sharing my screen so I could try to do that. Okay. And did y'all have any other questions?
I don't see any more in the chat.
Right.
Okay.
Excellent job, Mish.
Yes,
Thank you.
Mhm.
yes.
Appreciate that.
Someone
So
compound
much.
construction. Oh, that's answering the question.
Is there a question?
No, I think it was, Tara, was that a question? You're just giving some information, right? Yeah.
I'm just giving information.
Okay. Well, thank you so very much, Mish. Would you all help me to give her a hand in the chat? You find the clapping hands and let's give her a hand. She did a beautiful, beautiful job. I tell you, I certainly enjoyed your presentation. Mitch gave us such great information, so informative. A lot of eye-opening information. I don't know about you all, but there was some eye-opening information for me on today that I'm going to take a triple look at, not just double. I'm going to look at it 2 or 3 times. Such wise counsel and tips on good money habits. And we just really, really appreciate you coming and sharing this information with us, because truly it is our desire to be good stewards of our money. And, we do a good job in a lot of areas, but, sometimes we have some problems in this area. So we want to thank you and appreciate you. And hopefully we'll get a chance to hear from you in the near future, because this is such needed information. Well, ladies and gentlemen, I do hope that you enjoyed yourself on tonight. At the end of this session, there will be a pop-up survey. We're going to ask each of you before you get offline, if you would just take a few moments and fill out that survey for us. We will definitely appreciate it. Also, Sister Vicky has put up on the screen for us our next life class session, which will be on practical mental health strategies. And returning to us, she is no stranger to us, will be Dr. Atasha Jordan. And I think that session, I don't have the date for that session. Sister Vicky, can you help me with that?
Yes, and I apologize. I had it on another slide, but I guess I pulled the wrong one. May 20th, excuse me, May 20th at 7 p.m.
May 20th at 7 p.m. So we do want to go online and register for that next session, and let's invite someone to join us again. Once again, we want to say thank you so very much, Mish, for coming to us and for sharing with us this wonderful information. And we will get the word out to others to the tips that you have shared with us on tonight. Before I end tonight, we have our president with us, Sister Vicky Whitfield, and I'm going to, if she wants to have words to say, she can. And also, we want to acknowledge our pastor, Pastor Bush, for giving us this opportunity to bring this information to our members and to people across social media. So very helpful. Sister Vicky.
Thank you, Sister Joan. I do not have anything to add. I've just enjoyed the session, and thank you all for coming. we can close in a quick prayer.
Amen. Well, God, we just thank you so much for visiting with us tonight and this wealth of information that you have given to us through Sister Mitch. God, I pray your blessings upon her and this great ministry that she has to go and to share and enlighten others, that we may be good stewards of our money. And we pray, God, that as we go, that we will put these strategies and into practice, that we would do better in our budgeting and our planning, and that we will be aware of how our money is being spent. Because truly, Lord, we want you to get the glory out of our lives in every aspect of our lives, and especially in the area of finances. We ask as we leave, God, that you would be with each and every one of us until we meet again. In Jesus' mighty name, I pray. Thank God. Amen and amen. God bless you all.